Welcome to Money Matters with financial advisor Russ Story of Story Wealth Management Group. With over 20 years of advising clients, Russ has some ideas to share with you based on biblical principles, financial strategies from a Christian perspective. It all starts now. Here's your host, Russ Story.
This is Russ Story with Money Matters. We're going to be talking about money because money matters. And thanks for joining us here on the radio. It's a pleasure being with you today. Hope everybody's had a good week. Hope everybody's looking forward to a wonderful and happy and fun weekend. I know some people have to work during the weekends, and that's no fun. The weather's been really nice. Me and a lot of folks have been kind of cooped up inside, and I know everybody's looking forward to the weekend, and I hope yours is a safe, pleasant, happy time. And if you'll bear with me just a little bit, we're going to talk a little bit about money and some things. We talk about an awful lot of things on this program. We work hard to try to bring you ideas that I've gleaned over the last 25 years of being a financial advisor practitioner. If you have any questions, you're more than welcome to give us a call, 877-240-9787, or send me an email, rstory@storywealth.com. I'd appreciate any emails. We get quite a few. I try to answer each and every one of them. That's something that I will do. I will get back with you. So regardless of where you are, sometimes things that I talk about on the radio show come as a direct result of questions that somebody's asked on my email. So rstory@storywealth.com. rstory@storywealth.com. Now, today's show, let me mention, because this is something that on our website, if you go to storywealth.com, one of the things we're committed to do, and we're going to do a webinar on May the 9th. It'll be at 5 o'clock p.m. So, the idea is we'll do it at 5 o'clock. That way, if your work computer does better than your home computer, you can kind of just say, well, okay, it's time for me to go home, but I'm going to tune up the desktop here, and I'm going to see what old Russ has to say today. We're going to talk about a sequence of return. We're going to dig in a little bit on why that's important and why you should understand. I call that the investment industry's big lie, and I want you to understand why I call it that. I think it's important that you, as a more informed consumer, can understand why this is an important issue. So again, on the second Tuesdays of each month, we're going to be having a webinar. You need to go to storywealth.com, sign up. You need to pre-register, and it's got pretty simple instructions on how to get into it. And you'll have me there, and we'll be able to interact. I understand, and you'll be able to see. And we're going to cover, I think, one topic per webinar, and there'll be topics that I think are timely and that I think can help you in your situation and give you a better understanding of the investment world and what's going on. I'm going to talk a little bit about your accountant today. I'm going to talk about interest rates and bond values. I'm going to talk about stock market ups and downs. And I'm going to talk about, last but not least, and actually I'm going to cover this first, we're going to talk about risk. We're going to talk about risk, and I'm going to talk about why it seems that's out of vogue. Nobody wants to talk about risk right now. Boy, the stock market's been going great guns. Everybody's making money. I had an accountant tell me just the other day, Russ, I really don't know why. We really don't need financial advisors and investment advisors right now because this market makes everybody look good. Man, it makes everybody look good. Well, what does that tell me? Well, you know what? I've been doing this for 25 years. I look back and I remember some pretty difficult times. I remember 87. I remember 2000. I remember 2008. I remember 1999. I remember these times when things weren't going great guns. And when you look at things in context a little bit, what you begin to realize is that risk hadn't gone away. It's just hiding out. It's in the bushes somewhere. But you hear me now, believe me later. That bear will raise its ugly head. He's going to sneak out of the bushes, and he's going to get somebody. And my determination is, from my clients and for you listening to me by radio, if this will sink in a little bit to your bones, don't be lulled to sleep. Don't think that the bear's gone away and he's not going to wake up. Don't do it. Hear me now and believe me later. Let me give you some perspective. Since 1929, the Standard & Poor's 500 index, which we refer to as the stock market, commonly, has had, let's look at the average bear markets, okay? Now, since 1929, one has occurred every 3.5 years. Every 3.5 years, we've had a market pullback. We've had a market downturn. Typically, they last about 10 months, so not quite a year. And they typically erase over 35% of market value. And they take over 3 years to recover, sometimes longer. Okay, now we're talking about averages, but let's go back and look at that. 3.5 years, one occurs. Well, if one occurs every 3.5 years, how long has it been, Russ, since we've had a market downturn? Well, what if I told you it had been 7? You'd say, boy, it's getting time now. The time's coming. If it typically happens every 3.5 years, if it's been 7 years since we've had a pullback, as defined as a bear market, then certainly we better be getting ready. But if I told you it's been over 9 years, now wait a minute, the average is 3.5. That's right. And twice the average, we could argue that the risk is really high if it was 7 years. But it's been over 9 years since we've had a market pullback. Do you think we're due? Yes. But you know what? The car's whistling past the graveyard and everybody's feeling good, and we got a new president, and man, he's got everything on the right track, and everything's just going to be good, good, good. Don't be fooled by that. If you're within 5 years of retirement and you are lulled into this false sense of security, hear me, the chances of us having a market downturn that is drastically going to affect your ability to generate an income from your pool of capital is great. Now, Russ, you don't know. No, I don't know. But I do know history, and I do know that history repeats itself. And I do know that going into 2008, everybody was whistling past the graveyard again. Everybody was happy. Well, boy, we got this thing figured out. The Federal Reserve is going to mitigate risk, and we don't really have to worry about market downturns anymore when the market goes down about 40%. What happened? How many people lost money in 2008? I'm asking you. I'm begging you not to forget. So what I'd encourage you to do, and what I'm doing, and one of the things I do on this program is I'll, from time to time, share with you what I'm doing and what I'm telling my clients. I'm advising my clients to build a strategy, build a hedge in place, because I don't know that there's a whole lot of good places to go, and this is my opinion. Now, let's look at it. Typically what's going to happen is for the old modern portfolio theory, which most financial advisors are going to recommend around, you're going to have a certain percentage of your money in stocks. You're going to have a certain amount of your money in bond portfolios. Now, in my opinion, and in the opinion of what they call the bond king and some of these guys, we had a guy that we interviewed recently on Money Matters, and he's Brian Westbury. He's Chief Economic Strategist for First Trust Portfolios. He spent a good bit of time with us on the program, and he talked about bonds. And he talked about how he believed that the 35-year bull market in bonds was over, and I agree with that. If you have money in your 401k and it's in bond funds and balance funds, they have bonds in them typically, and you just have to kind of smoke these things out. I mean, you as an investor may not understand what it is you're actually holding. Well, I don't have a bond fund, Russ. I got a balance fund. Well, that balance fund may be 40%, 50% in bonds. So bonds, I believe, are very dangerous right now. I believe as interest rates do begin to rise, the government's telling us interest rates are going to go up some. Everybody's telling us. And if you sit there in a bond portfolio, it could be decimated. It could be really hurt. So we compile the bonds that you've got in that account with the stock portfolio that you have. And we realize that stocks, from a valuation standpoint, in my humble opinion, based on history and other people that I read and have a lot of confidence in, who are economists and are a lot smarter than I am, are telling us that the market basically is fully valued. And you've got institutional investors out here with their hand on the trigger, so that when things start going down, they run for the door, and guess who's first to the exit? It ain't you. by the time you're able to try to get in and get your trades done or whatever, your head's spinning around. You don't know what happened to you, and you wake up and you're in the snow somewhere. You don't have a coat on, and that's not a very good place to be when you're 3, 4, 2, 5 years before retirement. Or you just retired and you went down and met with some guy and he put you in a bunch of stocks and bonds. And his answer is, well, you just hold on. You ought to be all right. I'd encourage you not to accept that as an answer. You know, one of the things that we do at Story Wealth Management Group, we have an awful lot of clients that are within that 5 years of retirement, within 5 years into retirement. We've got clients that are 15, 20 years into retirement. But I believe that right now it's important that you relook your strategy as far as risk is concerned and put yourself in a situation so you don't get killed if the market takes this big downturn that it's overdue to take.
You're listening to Money Matters with financial advisor Russ Story of Story Wealth Management Group, where their purpose is to help guide clients in making the right decisions for their financial future. Russ Story began investing in the stock market through a class in high school over 30 years ago. He spent several years in Atlanta as a vice president with Buckhead Financial Corporation, and now he operates the Story Wealth Management Group based out of Douglas, Georgia. He has lectured at the University of Georgia on issues of retirement planning and financial issues, and taught investment classes at South Georgia State College. His titles and designations include financial advisor, registered financial consultant, and investment advisor representative. For more information, remember this website, storywealth.com. That's storywealth.com. And now for part 2 of Money Matters, here's your host, Russ Story.
So I'd encourage you, if what I'm saying makes sense to you, but you're like, well, Russ, I hear what you're saying, but I don't have any idea what to do. Well, give me a call, 877-240-9787. Send me an email, rstory, R-S-T-O-R-Y, at storywealth.com. And tell me that this is a concern of yours, and I'll get back with you, and maybe we can spend a little time and we can talk about it, because I do believe that while I do not know what the market's going to do next week, next month, next year, and of course we want to make as much money as we can during the times that the market's making hay. We want to make hay while the sun shines, of course, but we don't want to be the last guy to the exit door. And I've got some ideas, some strategies, and I think they're unique. I think that we do as good a job at this as anybody else in the Southeast. And if your situation is 5 years before retirement, 5 years into retirement, I'm telling you, this can be one of the most important decisions that you have made ever concerning your financial future, concerning your investment account. So I can't stress that enough. Again, 877-240-9787. Send me an email, rstory@storywealth.com. Now, we're going to do some webinars, and one of the first webinars that we're going to do them the second Tuesday of every month. We're going to have a webinar. Storywealth.com is where you go. There's a place on there where you can register. Go in there and register, put your name, address, whatever they're asking for, and we'll fire it up. They're going to be on the second Tuesdays of each month, and they'll be at 5 o'clock p.m. Now, this first one is going to be on what's called sequence of return. And I think when we get through this webinar, you'll have a much better understanding of why it's important to manage risk. You know, there's a time in football to play offense, and there's a time in football to play defense. Basketball, baseball. You know what? You know, getting lulled into a false sense of security where all you're doing is playing offense is bad. It's bad, okay? Don't do that. And there's a time to play offense and there's a time to play defense, and don't get those confused. So anyway, everybody's looking for a piece of your pie. I don't know how you feel about it, but I feel like everywhere I turn, the tax man wants a piece of my pie. You know, as I get older, I'm told by the television and different insurance agents that, man, I need long-term care insurance because the nursing home and long-term care and the doctors in the hospitals are going to want a piece of my pie. You know, family wants a piece of my pie. Whatever I've worked hard and put up, you know, hopefully, you know, you have in-laws and not outlaws, and hopefully you don't have a bunch of grubbing family that are trying to get to what you got, but that situation does occur from time to time. In Florida, if you're listening to me down there, probate can be kind of pricey down there, and there's some issues of public information and privacy that you may want to talk about. That's something that we talk about, but estate taxes are something that may have an impact in the future, and you need to understand what your broker or your insurance agent's doing to you, and you probably need to know some of the tricks and issues that come about there. One of the things I want to mention while I'm on the insurance agent and insurance broker, I'm gonna hit them a little bit. I want to remind you that tax deferral is good, and one of the things they sell is all about tax deferral when it comes to these annuities that they recommend and sell. And annuities, it's like anything else. Tax deferred investments, annuities. I talked about this on last week's show. It can be very advantageous, but they can be expensive. And, if you've got a variable annuity inside of your IRA, if your IRA is a variable annuity, then, there's a chance that you're being overcharged a good bit of money by having your investment set up that way. One of the things that you pay for when it comes to an annuity is tax deferral. And you pay the insurance company internal fees that you might not know about. And again, it ain't what you make, it's what you keep, right? So I'd encourage you to consider a review. There's some things that you can do that can benefit you. If you have a variable annuity inside of an IRA, there's some alternatives perhaps to reduce your cost and do some things like that. So I'd encourage you, if you have a variable annuity, and it is an IRA, or if it's inside your IRA, I'd encourage you to talk to a financial advisor about it and see if it makes sense, and make sure that the reasons you bought the annuity inside the IRA still hold water. So if you are not sure, if you have questions, you can give me a call, 877-240-9787. Email me, rstory@storywealth.com. That'd be great. Again, and I'll get back with you and we can talk about whatever the situation may be.
You're listening to Money Matters with financial advisor Russ Story of Story Wealth Management Group. Financial security is more than just a balanced budget. It's about knowing that you're prepared to face the worst in life and that you're ready to take advantage of the best. This type of security can require a highly individualized approach to financial planning and investment management. Story Wealth Management Group is committed to providing just that, focusing on both the numbers and the people by making your unique personal aspirations a cornerstone for your tailored solutions. For more information, remember this website, storywealth.com. That's storywealth.com. Or call the office directly at 912-384-0030. That's 912-384-0030. And now for part 3 of Money Matters, here's your host, Russ Story.
I want to hit it quickly, interest rates and bond prices. Okay, now, I talked about it earlier when I was talking about risk. I was talking about my concern that everybody's kind of lulled to sleep. And the reason I know that is because when I talk to people now, when I talk to my clients, they're real happy maybe with the returns that they've gotten over the last year or two. Everybody's kind of, boy, this is good, and everything's going to be okay. Everything's going to be okay. We're going to continue to make money, and we're not going to have these drastic swings, and everything's going to be. I remember when Obama was president, man, we had that in 2008. Boy, things just took a header, and man, my account, I lost so much money. In fact, I was so afraid that I took my money out and I never put it back in. How many folks are in that situation? Well, the reality is, most Harry Markowitz won a Nobel Prize in economics back in the 1970s in his work during the 60s. He came up with what he called the modern portfolio theory, and basically it's a glorified way of saying don't put all your eggs in one basket. And what it was designed to do was try to reduce risk overall in a portfolio, but give folks an opportunity to make good, but also to reduce risk through diversification. And he used some pretty complicated analysis tools. And again, he won a Nobel Prize. And Markowitz, Shapiro, Miller, these guys are the fathers of financial planning, or especially when it comes to investment advisory. But here's where we are today, in my opinion. Let me, first preface this by saying this is Russ's opinion. I've been doing this for 25 years, but first of all, the stock market is fairly valued. It's probably kind of up there pretty good from a price-to-earnings ratio, depending on how we want to value the market. Now, you'll turn on the television, and there's plenty of people talking and arguing both ways. So depending on whether you're listening to CNBC on Monday or Thursday, they'll tell you something totally different. So it's very difficult to glean information. But the reality is price to earnings ratio, there's a lot of things that go into looking at market valuations. They're pretty high compared to historical averages and from a historical perspective. People are very optimistic right now. So stocks seem to have a lot of risk with them. And then bonds, you say, well, my 401k, the lady I talked to was really nice, and she helped me, spread it around. In fact, they've got this program where you just, check one block and they kind of spread it around for you in different stuff, and that's good. Well, if it's stocks and bonds, if the stock market's overvalued and it has a correction perhaps, then that portion of the portfolio is going to go down. If you have bonds in that account, then bonds in a rising interest rate environment, and the Federal Reserve Chairman Janet Yellen tells us that interest rates are going to rise. So if interest rates go up and stocks go down and you're sitting there in your 401k, you're getting a double whammy. Not only are you not making money in your stocks but losing money, you're not making money on the bond side and you're losing money. And I'm really, really concerned that that's a predicament that a lot of us are going to find ourselves in when everybody goes for the exit door. So I can't impress on you enough today how concerned I am about the lackadaisical attitude about managing risk that most of my clients have gotten into. Folks that I talk to, when I talk about risk, their eyes just kind of glaze over and they just don't want to think about it. There was a great investor out there, and most of you've heard of him. But he, in fact, some people call him the greatest investor, the old Oracle of Omaha, Warren Buffett. Warren Buffett said there's a couple rules of investing that you need to keep in mind. One, when everybody's brave, you need to be fearful. I'm paraphrasing a little bit, and when everybody's fearful, when everybody's afraid, that's time to be brave. Right now, where are people? They're awful brave right now. And I'd encourage you to make sure that you really look and have a strategy in place so you're not the last one going to the exit door, because with institutional trading like it is, these guys set those sell stops in there, and they're talking about billions of dollars. And, man, I'm going to tell you, you just about will have a hard time getting out of this thing and not being the last guy to the exit door. So, anyway, I've talked a little bit about interest rates and bond values. If you had a bond, it'd be a little different, because that bond will actually mature or be called one day, and it'll pay the interest that's stated in the bond. So if you hold that bond, unless of default, then it's gonna eventually come back and pay you your money back. The problem with a mutual fund, a lot of mutual funds in 401ks or mutual funds in regular accounts, is that if you have money in that mutual fund and it's a bond mutual fund, the manager actually has to sell bonds when folks start redeeming. And what are people going to do when the bond value on the statement starts going down? Well, they're going to sell out of that one and put it over the one that's doing good, right? I mean, that's what people, most people's investment strategy is, well, I'm going to sell that one because it ain't doing good. I'm going to move it into that one's doing good. And that's kind of counterintuitive, really, historically. That doesn't really help a lot, but that's what most people do. And when they do sell those bond funds, then the bond mutual fund manager literally has to sell the individual bonds that he holds. Now the loss has become real. It's not like you have a portfolio of individual bonds that you can actually hold until maturity and make sure you get your money back. So I see a lot of dangers right now, and it seems that nobody else is looking at it. Not a lot of people are talking about it. So I'd encourage you, talk to somebody about a strategy and putting a strategy. Now, we want to make hay while the sun shines, brothers and sisters. I understand that. We want to make as much as we can, but hear me now and believe me later. You need a strategy, sooner the better, so that you're not that last person trying to head for that fire escape. Again, it's been a pleasure talking to you. My name's Russ Story. I'm your host of Money Matters, and we're on Wave 94 in Tallahassee. This program will be on WDMG 979, Douglas, Georgia, your community station, and it's always a pleasure to be with you. Hope everybody has a safe, fun, pleasant weekend. This is a wonderful time for us as Christians as we Good Friday and we move into we just had Easter Sunday, and the Lord's blessed us in an awful lot of ways. And here lately we've had some absolutely beautiful weather, and I hope you and yours have a great weekend, and be safe, and may God bless. Thank you.
And that's another edition of Money Matters with financial advisor Russ Story of Story Wealth Management Group. Find more information on this website, storywealth.com. That's storywealth.com. Feel free to email your questions and comments to Russ at this email address, rstory@storywealth.com. The email, rstory@storywealth.com. And finally, here's the phone number to call right into the office of Story Wealth Management Group, 912-384-0030. That's 912-384-0030. Story Wealth Management Group is an independent firm with securities offered through Summit Brokerage Services Incorporated, member FINRA SIPC. Advisory services offered through Summit Financial Group Incorporated, a registered investment advisor. Investing involves risk, as you may incur a profit or a loss. Please carefully consider investment objectives, risk, charges, and expenses before investing. Past performance cannot guarantee future results. Summit Brokerage Services, LLC, and Story Wealth Management Group do not provide legal or tax advice. For services of legal or tax advice, please seek the services of a qualified professional. Be sure to join us next Friday and every Friday